Welcome to the 40 Finance channel, everybody. My name's Jeff Beers, and today I want to throw out a little bit of a warning, or at least another train of thought, that I see all these analysts and people on YouTube talking about buying cruise stocks on the dip during this coronavirus scare. Not a good idea in my opinion. I'm going to tell you why right here. Let's jump in. And don't forget, guys, if you like stock analysis, personal finance videos, and investment ideas, please subscribe to the 40 Finance channel. I appreciate your support. All right, outside of the big financial news of the stock market crashing, coronavirus scares going on all across the world, one of the sectors that has been hit harder than almost anything else has been the travel and tourism sector. And what you're seeing right now with these cruise lines in particular is the big three, which we're going to review here in a second. The big three are all down 50+%. And to top things all off today, the United States government came out and issued a warning. Basically said, for anyone who would be an at-risk person, which is basically folks with existing medical conditions, as well as seniors and the elderly, to just stay away from the cruise ships. And frankly, it's pretty good advice. The cruise ship industry has a pretty long track record of having health issues and trouble containing health issues. At least here in the past 10 to 15 years, numerous cases of food poisoning, viruses, flus. As soon as you get all these people together from different environments and you stuff them on a big cargo ship, if one thing goes wrong, it certainly creates a domino effect. So another hit to the cruise lines yet again today. United States government says stay off the cruise ships if you have at-risk factors in play. And let's be honest here, retirees and elderly make up a pretty nice chunk of the cruise line's everyday revenue. All right, now speaking specifically in terms of stocks, the first one I have here on the board is probably the most famous, and that is Carnival Cruise Lines, Carnival Corporation, ticker symbol CCL. Today it ended with a stock price of $21.74. That's well over 50% off of its high 52-week range of $57. And as you take a look at Carnival Corporation stock here just a minute, yeah, on the outside you have a P ratio of 5 right now. P ratio of 5, which is absolutely unbelievable. Certainly attractive from that initial valuation standpoint. However, you have a company right now that's based upon $20.82 billion in revenue over the trailing 12 months. They're sitting on twice that amount in debt, $45 billion in debt. And the one thing that we know, regardless of what I say or what the government says, the revenues for the cruise industry are going to go down significantly, maybe half, maybe more. I can't think of a single person who would book a cruise right now, but let's just assume at least 50%. So that PE ratio, price to earnings, is going nowhere but up. Regardless of where the stock price is today for Carnival, and we know that when ships sit in the port that the costs are going to go down, right? So certain things like fuel and human resources and certain things like that are going to go down. But the reason it's going to go down is because there's no daggone revenue coming into the company. So Carnival right now, if you just sort by P ratio, you're going to see perhaps an attractive buy the dip offer. If you dig in a little bit deeper, see a company that's writing $45 billion in debt, is basically looking at revenue streams dropping significantly, and you start to wonder to yourself if they can service the debt and the dividend that they've promised to investors. The dividend yield right now is at 7.18%, which is absolutely phenomenal for your average year for the cruise lines, but this is not an average year. And if that debt load hits harder than they think without the revenue coming in, I really wouldn't be surprised to see some of these dividends get pulled. All right, next on the board is Royal Caribbean Cruises. RCL is your ticker symbol. Stock price right now at $48.27. This is a smaller market cap than Carnival Cruise Lines by about $5 billion. They stand at $10 million in their market cap. And what we have here is a stock that has done the exact same thing as Carnival. No surprise, big drop down. And the fundamentals here, you got a P ratio of 539, just like Carnival, looks really good on paper. You dig deeper, last 12 months, $10.95 billion in revenue, which is obviously outstanding. You're carrying, however, $11.8 billion in debt. And now all of a sudden, your revenue has been chopped significantly going forward. RCL also has a dividend of 4.74%. That's a little bit lower than Carnival's, but again, they're eventually going to face questions if this doesn't rebound super quickly. Will they be able to service the debt load? Will they be able to keep supporting the dividend? All right, last one to look of the hot hitters in the cruise lines. You got Norwegian Cruise Line, ticker symbol NCLH. Here we have a P ratio, lowest on the board of 4.61, market cap of $4 billion, which makes it the smallest of the three I'm featuring here today. They do not offer a dividend with their stock here at this point, and I don't think that's going to change anytime soon over the next month. Same sharp decline as our other three. From a revenue perspective, you got $6.46 billion in revenue, you got $7 billion in debt. So these companies all sort of mirror each other in the sense that they're carrying as much debt at any one time as they bring in for a 12-month period. That works out well when the money is flowing fast. However, for all of these cruise companies right now, I don't think the money is going to be flowing fast for much longer. All right, now looking at TipRank's dashboard like we typically do here on the channel, one of the things that I think is important for new investors or younger investors to think about is where analyst ratings come in. Right now, we've got a time where news is firing in as fast as possible. Every day is something different across the stock market and, of course, world health. And what you see is all these cruise lines have an upside of the lowest of Carnival at 130% and the highest of 207%. That's where TipRank stands today. But as I looked through some of the analyst ratings, most of them are well over 7 days old. So what that means is in a rapidly paced news environment where things just seemingly continue to get worse for the cruise lines, these target upsides, while they may still hold true for some analysts, I think what we're going to see is the dominoes are going to start to fall over the next few days. So I guess ultimately with this TipRank segment here, what I want to stress is just the fact that right now, stocks are tanking across the board, numerous sectors. Analysts who cover certain stocks likely cover other stocks. You really should be watching a stock on a watch list or something for a significant amount of time to really conceive when a value opportunity comes up. If you are really new to the cruise line industry, tourism industry, and all you see is this price drop of 50+%, and you just immediately go through the math that, okay, well, it's down 50%, it's definitely going to go back up. That's where you have to be careful, because even though this is a unique situation with the coronavirus, there's no promises that it's going to go away anytime soon. And then you start thinking about how much time will it take really to ramp some of these operations back up. All right, so to recap a little bit about my cruise stock bear case, we know we have government consumer warnings specifically for the cruise industry, okay? Not the zoo, not Disney World, the cruise industry, okay? We have the likelihood of absolutely disastrous earnings reports in Q2 and 3, so the bleeding is not going to end here after just 1 or 2 weeks. They have high debt loads. You're looking at potential dividend cuts. I'm going to say a minimum 2-year recovery to get back to par for these cruise lines. if we assume that coronavirus is still in a state where there's not necessarily any good news or recovery news coming out yet, so let's just figure we got another month or so before we start to get this thing under control. Then you still have the fear and panic, depending on how far this has went, from people canceling further out, from people who didn't go on their cruises, and just the bad sentiment they've had of people being stuck at port for being potentially infected with corona. Nobody wants to go through that on their vacation. So I see at least a 6-month period where bookings will be way down, and then potentially another 2 years before bookings are back to the point before this whole stupid thing started. Now, that's just a guesstimate on my end. Use your own business sense. And then lastly, what do we know about the coronavirus to say that it won't be back next winter, right? We're sort of lucky in some ways that it hit in the close to spring time frame, and I guess like the general assumption is that just like flu season tends to dissipate as you get closer to summer, I'm certainly hoping that this virus panic subsides as we head into summer, but then flu season kicks right back up again in November and December. Are we going to deal with this? I certainly don't have the answers for that, but I know one industry that I won't be betting on until I find out we're in the all clear, and that's the cruise lines. All right, guys, bottom line, I'm seeing a lot of people out there suggesting that cruise lines are a great buy simply because they dipped 50%. I would encourage you to stick to stocks that are growing their earnings and growing their revenue. And while they might be pushed back a little bit during this coronavirus, their ability to bounce back, particularly in the tech world, the health world, things like that, that's where you're really going to find the bargains. You're looking for stocks that have went down to a price that makes them on sale, so to speak, and that you can feel good that as soon as we switch over to good news from all this bad news that we've had, that earnings will continue to plow in. I personally think the cruise lines have a long uphill climb to go, even when this thing ends, because they have to recover not only lost revenue, but they have to recover lost reputation, lost bookings, all those things. It's just going to be tough. As always, do your own research before buying a stock, but when it comes to cruise lines, I'm out. All right, hope you guys enjoyed this. Please give me a like and subscribe if you enjoy stock market analysis. See you on the next video.